Before you learn support and resistance, EMAs and entries, you need to understand the basics on how to read candlesticks on the charts. If you haven't traded before, you need to understand what TradingView is, how we use it, and why we use it on a daily basis. So let's get onto the screen record. First of all is TradingView. You need to understand what TradingView is, why we use it, and what it can do for us as a trader, especially being a beginner. So what you can do, TradingView, you've got two different types. You can have a free subscription and a paid subscription. The main difference on that is with the paid subscription, you can use the backtesting feature and have more stuff available to you. But with the free, you just are limited to a small amount what you can do and what you can use. So if you're serious about trading, you really should go for the paid subscription. And if you can wait till Black Friday or see if they've got any other deals on through the summer, that does help out. So TradingView, first of all, we'll have a look at my account. You can see as you go up top, if we logged in, you've got everything you need. We are in a premium, as you can see up top, and this is the Limitless Trading Club. We've had this now set up for about 7 years, I think, on TradingView itself on a premium. Down this side, you're going to see everything you need for the charts, along with deleting stuff down this side. Up top is where you're going to find your time frames that you use on a daily basis, and also what currency pair you want. If you click on that, that will then bring up a selection bar there, and you can type in currency pair, stocks, funds, whatever you're after, crypto. On top is where you find your indicators. I've got a video coming up about our indicators we use. We're going to use 2, and that'll be another good video to go and watch after this one. Then you have your alerts, if you want to set alerts if trades are coming into play or not into play. And then the replay feature is for your back testing. So from that, the biggest thing we also use on here is the back testing feature, which we will do now. So you can back test, you can pick a time frame that you want to go back to in the charts. You can jump back to that, and then you can trade as if it's real-time information, and that's back testing so you understand trading strategies, or if you're creating a new trading strategy. Then finally, with the TradingView, you can create a watch list, which you'll find up in the top right-hand corner, and this is all the currency pairs you're looking at, and it will save all of your drawings and analysis onto this account, and it will also save it to your phone. So if you're out and about, I can do all my analysis every morning here. If we're out about in the gym, if we've gone out in the cars, whatever we're doing, I can always check trades on the phone or on the MacBook if I'm taking that out with me, if I'm out for a longer period of time. So with the watch list, you can space through, skip through all of these, but one key little feature is the space bar on your keyboard. You press space bar, that will just flick through all of your watch list, and that makes it nice and easy to keep select it. And you can do that with the watch list closed as well. You can just step through. So that makes it easier for you to find your analysis.
That's something Jack didn't find out for many years and really likes now. So if you want to find out tips that Jack's already found through his 8 years of trading, join the Limitless Trading Club for free in the link in description, and we'll see you inside.
Yeah, remember, as Sam said, it's free there. Right, so now you understand what TradingView is, why we use it, and yours will not look the same as mine, not unless you do join the Limitless Trading Club, because there's videos in the course on how to customize your TradingView to look the exact same as mine, or how to just customize it in general. Let's then understand candlesticks and what the candlesticks can do for us as traders. Candlesticks. The candlesticks you can see in front of us are Japanese style candlesticks, and these are the candlesticks I've used only and forever, and they show us quite a lot of information in where the market is moving and also what the market has done. So each candlestick you can see in front of me, if that's green or grey, that represents a time period of that candle and of the chart movement. So at the minute we're on the daily time frames. Every candlestick you can see in front of us is 1 day or 24 hours. If anyone didn't know, the market is open from Sunday night at 10 AM and closes Friday night at 10 AM London time. So we've got 5 days a week that the charts are open. I believe cryptos are the only ones the charts are open all the time. We don't trade them, we just buy and hold crypto. So what we're looking for here is the differences what they show. So every time if I go to a 4 hour time frame, you're going to see now each candle shows 4 hours of time on the candles. Again, if you drop down to the 1 hour time frame, that's the same thing, so on and so on, 5 minute, 10 minute, all that sort of stuff. What we're looking for on the candlesticks, and we go 4 hour time frame because this is my favorite time frame and gives us the most confidence, is each candlestick you can see, you've got the body and the wicks, and then you've got the open and close price. So I'll show you that now on this big one in front of me. So this is a bullish and bearish candle, which is what we're seeing. This candlestick you can see in front of me is a bearish candle. So bullish means up, bearish means down, or long and short is what the terminologies are for trading. So if we was looking for a sell trade or a short trade, then what we'd be looking for is the candlestick itself. So what happens here, the top of a bearish candle, so a sell candle, is where it opened. And the bottom of the candle is where price closed over that time frame. So this here was a 4-hour time frame. So this candle showing 4 hours of time. So the top is where price opened here. When this candle went from the, let's say it was, or that is 6 o'clock till then 10 a.m. So 6 a.m. to 10. So when it went to 6 o'clock, a new candle come. That is where it opened. And then at 10 a.m., that is where it closed. And that's the body of the candle is there. That's the information it's showing. Then we also have these little bits you can see, which we call wicks. They will be different colors on your trading view if you've just opened up a new account, but you can change them to whatever you want. I just like them nice and black. And what that shows you is where price actually went to over that time period. So as you can see on this candlestick in front of us, we've got a really high wick on top, but not a lot of wick on the bottom. Meaning at some stage, this candle was actually a bullish candle, meaning a long candle or a buy candle, and it looked more upwards. So if we show that now, what this candle will look like, what can I show actually? If I go rectangle, that actually will looked up a bit more. If I can bring that across, it's not going to work for me now because it's going to play me up. But you get the idea. It would have looked a bit more the other way around, a bit more like this candle here, and would have had a big wick on the bottom. Overall price, there was more sellers in the market than buyers, and this is what it's telling us. So overall, the candle wicks just tell us where price moved in that time frame. The actual candle body is what we're looking for entries and for confluences, because that just shows us overall what actually happened in that time frame. So this time frame shows us that there was more sellers, people looking to enter sell positions or short positions, then there was looking for long or buy positions. And if you was looking to place a trade or a sell trade, that's a very strong confluence that price is moving in that way. So that's what we're looking for when you're looking at candlesticks, is what the wicks are doing and what the bodies are doing, and also what is showing you overall on a time frame. The higher the time frame, the stronger the candle. But then obviously that means depending on what your trading strategy is and should be, shows you your entries. So 4-hour time frames we use as confluences. So you can see here, price is rejecting the 4-hour, price rejected the 4-hour at big wick. So it shows you, look, price rejected the 4-hour with a big wick, price pushed up. So it shows you normally the time you can get confluences from the candlesticks on what direction they are now wanting to move. And that's what we look for when placing entries. Obviously you need structure and everything else around that, and you will find that in our 2 trading strategies, as Sam said, in the Limitless Trading Club. But that's what the candlesticks look like. Now we're going to show you some setups of what each candlestick looks like and what we're actually looking for. So we'll do that now and see if we're going to just pick them out as we go. Main one is an engulfing candle. And that basically just want the new candle to engulf the previous candle. Yeah, that's all we're after here. So we've got one right in front of us here. So we had a engulfing candle as such. No, that's not a very good example. That's a better example there. So as you can see here, we had price push all the way up. So that is bullish movement. We had a then bearish candle, but it was just halfway, not a very big strong candle. We had a nice wick on it, but not a lot. This is called a doji candle in front of us here. So if I zoom in a little bit more, that basically means that price couldn't decide what was happening, and it opened and closed at the same point or similar points. And it's just classed as a doji candle, meaning there was not a lot of movement, or price just as there's buyers and sellers in the market, giving us not a lot of great information. From there, price then moved up a little bit with some strong wicks showing that price was going to move in bullish movement or upwards movement. But actually, then we had a strong engulfing candle, meaning that there was a lot more sellers now come into the market and go, we're opening sell positions or short positions down to their next point. So this here is an engulfing candle. It engulfed the body. The body itself, it opened at the same point where that closed, but it actually engulfed the body. As you can see there, that body is a lot bigger than this one. On rare opportunities on the 1 hour time frame, with our strategies, I will take 2 engulfing candles to to engulf the previous one candle in the different direction. Again, another engulfing candle here. You can see that's the body, that's the wick. The wick is actually bigger, but we are looking for the bodies, yeah? And that's what's going on there. From that, you have then an evening star or a morning star, give or take. This here is in front of us is an evening star. Price pushed all the way up. We had a doji candle, then an engulfing candle. That is an evening star. Sun is setting. Prices come up. Now that the price is going to move down, it shows that there is a change in where trends are, and that's what we're looking for on that. So that's simple. We will find more terminologies inside the Limitless Trading Club on what to look for on entries, and I'll go more into depth in that. But for candlesticks, you're using the wicks to understand where price is moving to and from, but the bodies are what we mainly look for on the movement on the Japanese style candlesticks. So for a quick bonus, I'm going to show you how to see high and low trends and which way the market is moving. And I'd normally do that on a 4-hour time frame or on a daily time frame, just because I'm a day trader, so we don't place a high volume of trades. But what we're looking for is where the 4-hour EMA is mainly. So as you can see, we're looking right in front of us here. You can see price pushed above the 4-hour over here. It pulled back and then it just pushed straight up. That is in a uptrend. It's creating a higher high, higher low, higher high, higher low, higher high. Yeah, that's what the price is doing. It's creating higher highs and higher lows, meaning price is moving upwards, then exhausting, moving upwards and exhausting. I'll show that now. So if we come over here and find the path, what price is doing is coming up and then it pulls back. Then it comes up, then it pulls back. And what we do as traders is we're trying to catch from point A to point B after price has pulled back. That's our biggest thing that we're trying to catch. We then just use everything else to stack to get better entries and a better trade overall so we can make more profit. Again, vice versa, if we look at it the other way, is then once price created a new lower low, so price here carried on from where we was, price then made a new higher high, then price pulled back, this was the previous higher low, price broke that. So now this here is now in a downtrend and it's reversed. Price is now reversed in the direction it's going and is now in downwards movement. But that is not the new lower low. Down here is the new lower low. That is the new lower high because we're now moving downwards. And then this here is then the next lower low. Again, price then changed again. Price come back up. Didn't make an equal to or a new higher high. It just made a higher low. So price could have carried on pushing down from here. Could have just done this and carried on and broke through that weekly zone. Price didn't. Price come back up and made an equal to. Yeah, that was the higher low. Now we made a equal to higher high. And then price pushed up again and then it pulled back. And now in another uptrend and price is reversed. So you're always looking at where price is moving up or down inside the markets to see where we then can start moving for entries and where our market structure is. So as you can see, that is very, very simple stuff when you break it down and you have a clean and clear trading view screen. If you have loads and loads of indicators, loads of stuff going on, all the crosses and boxes in the background, it makes it very, very difficult to trade and to keep it simple to understand what's going on. The simpler you can have your trading, the more you will enjoy it, and basically the more profitable you will be. Yes, there's other factors into that. If you're back testing, if your trading strategy is actually any good, and if it's proven, and the amount of data you have on the trades you're placing. But if you can spot candlesticks and understand how to use them for your entries and get better entries, they will just stop you getting taken out of trades early or trades hitting stop loss instantly once you've entered. The biggest thing I can say with that is when you're looking at candlesticks is make sure they have closed on the time frame you are looking for. If you are on the 1 hour time frame, do not enter a trade at 1:30 just because the candlestick looks good. That candlestick has not closed yet and can still reverse and go in the different direction you are wanting it to. So always wait until the candlestick has closed on the time frame you are on. So you'd wait till 2 p.m. and then you can enter the trade if that's what you're waiting for. But that is the biggest thing I see a lot of traders do. They understand everything, but they leave that small detail out, or they enter a trade halfway through the candlestick's life and then the candlestick moves in the wrong direction and you get taken out of the trade. Bosh, 1% or probably 5% because you're a bit of a moron and you put too much risk on. But that is what you've got to wait for. Just please wait for the candlestick to close. And I will see you guys inside the Limitless Trading Club. because you need a little bit more education on your candlesticks.